So, today I will be going over. I'm a little bit sick, actually, a lot sick. So, um, yeah, now let's just go over. Um, so, I'm gonna be talking about data again, but in last call I did it on DXY. Now I'm gonna do it on EURUSD. And also at the end, something really interesting, how you can predict the future with like beautiful accuracy, or more than 90% every single time. So now let's see. So we said in the next call DXY is going up, so then that means EURUSD is going down. Let's confirm, is that right? First, we have this red line right here. That's today. That's this weekly candle right here. Just ignore all this shit right here I have. So what we can see at the end, we can see that data is showing. I'm gonna call this data chart. We can see that data is showing us that price will go down based on data, and it will stop going down at the start of October. Okay, so and if we take a look, we have this low right here, this low. We can see that price will take out that low at the October, react higher, and then push much lower. That low right here is this low right here. So that means price will do this, break that low and bounce off of a fair value gap. That will be beautiful to look for shorts on the lower time frame. As you can see, the pullback and then boom, push lower. And where? To this low right here. This low, taking out this low, and after that reaction higher. This low is this low right here. This equal lows. And if we take a look, that is a 20. Yeah, that is, let me just mark that. That's IPTA or IPDA low. So that means price will probably react off of that level. And I'm talking about IPDA or IPTA lookback period. So, as I said few weeks ago, I think price will reach these equal lows, but we were somewhere right here, and I said price will do this, then this, based on lower time frame. But after that, price went a little bit higher, and then I said it's gonna happen accumulation, manipulation, distribution. It happened, and now what I think is gonna happen is this. This is our drawn on liquidity for now. This high right here, price will take that out, sniper wrench off of the rejection block, and doing this, and moving to IPDA time base level off of 20 days, 20 bars look back period. Actually it's based on 60 bars. I think it's based on 60 bars, because if we take a look at on, let me just see. Yeah. So that's IPTA time-based liquidity low, basically like this, but I'm gonna just mark it like this. So we can expect that price is gonna push to that level, because we can use IPTA as drawn on liquidity. And there's also small chance price taking out this high then pushing lower. But there's a big chance of price pushing to this drawn liquidity, that's IPTA, and also confirming data, all that stuff. And as we can see, this low right here, price taking that out and reaction. This low right here, we don't have it, but we have clear IPTA low, equal lows, sweeping and reaction. Okay, so overall this is what I'm expecting. Okay, and by the way, this call is recorded. So this is overall what I'm expecting. And what we should focus on is weekly low and weekly high. So tomorrow, tomorrow, new weekly candle opens. Okay, and we have weekly high, which is data high, on a lower time frame because of FOMC, and we have the weekly low, which is time based. That's time based liquidity. Why that? And when I say time based, that means price will probably show some signs of reaction. And why? What is confirming that? If we take a look on data at the at the start of October, we should see small pump, and that's after sweeping this weekly low. We should see small pump. And why is this time-based liquidity low? This is time-based liquidity high, data high, sorry, and this is time-based liquidity low, weekly low, because I have this sessions indicator. I turn on London and New York. I don't turn on Asia because I have indicator, Asian range. So what we can expect, why this is time-based level, liquidity level, weekly low, because on lower time frame, that's old session low. Let me go on 15 minutes. This right here, that's the weekly low, and that's time-based low. Oh no, sorry, this right here is time-based low, because it's old session low, Asian session low, for example. This is time-based low because this is London low. Actually New York low. This was also time-based high because it was London high. And look at the reaction. Okay, so let me go on a weekly time frame again. Yeah, like this, perfect. Okay, so yeah, this is basically we have this drawn on liquidity, which price is gonna hit 100%, and then we have this quarters theory level, which is giving us confirmation that price is gonna bounce off of this rejection block, probably with the sniper entry, but I will also have marked out the levels off of the rejection block and look for a lower time frame PDRAs. Okay, so what is confirming all that also now, which is really important, which you cannot find online anywhere, which I'm gonna teach you now, is y'all know I use the XY for confirmations, but so now that I went over the EURUSD, now let's take a look on the XY. Okay, so now I'm gonna be focusing on this IFEG, by the way, because we will get on the XY something like this, or something like this actually. So what can confirm with a big accuracy that we're gonna have a bullish week? Data is telling us, PDRAs are telling us, liquidity sweep, everything. Now how can we be 100% sure? It's because if we take a look at these two markets right here, US 10 US30, but it has this Y. I don't know that I said that correct. This is yield. That's okay. So these are yield market. So if we take a look, we have 30-year-old yield and we have 10-year-old yield. And if we take a look at 10-year-old yield, what can we see? Actually, let's go on the 30-year-old yield. What can we see? It's looking really similar like DXY, right? And the thing is, yields are moving earlier than DXY. So yields are showing us what and where DXY will go. So look at this, look at this, look at this. DXY swept this low. DXY swept this low right here. I don't know how much can you see it, but yeah, DXY swept this low right here and closed above with the and didn't close below with the body. Yields did the same thing, swept this low right here, didn't close below with the body. And guess what? We have, by the way, this nice order book, and again, so what do we have on DXY? We don't see any bullish weekly candle for now, right? We are in bearish weekly candle. But what can we see on 30-year-old yield? We can see bullish candle. We can see bullish weekly candle. We can see price sweeping previous week low and reaching all the way up to this weekly high. Interesting, right? So now we know the next DXY candle will be bullish. We have sweep right here. If we take a look, sweep right here, not closing above, not closing below with the body. Yields, sweep right here, not closing below with the body. Sweep right here, not closing sweep right here, not closing below with the body. Same with DXY, as you can see. And now yields are showing bullish candle, slipping previous week low and hitting previous week high. So now what we can expect on DXY, sweeping previous week low and pushing to the previous week high. That's interesting, right? And now the weekly high, this is the previous week high, this right here, and that's called future projection high. Okay, future projection high, because that's previous week high. Okay, let's call this previous week high, okay, because tomorrow is gonna be new week. Price hitting weekly high. On DXY it didn't. That means on DXY it will hit this weekly high, and that's called future projection. Okay, so we also got nice bounce off a 4-hour order block, and if we go on a yields, we can see on daily time frame market structure shift with displacement creating nice fair value gap. So what I think is gonna happen on yields is this right here, weekly power of 3. Okay, accumulation 1 to 3, actually monthly power of 3, accumulation, manipulation, distribution, or weekly power of 3, we will see. And also something really interesting, it's now I'm gonna show you how weekly sweeps are actually important. For example, here, let me show you something now. We have this, let's say this week right here. This is weekly high, and this is weekly low. Price first swept weekly high, and as you can see, we got strong reaction to the upside. And for example, if we looked for bearish Enigma 2.0 setups, it will be failed, alright? Actually, no. Let's go on a 15-minute time frame. That's the weekly sweep. Here actually nothing special, just a small reaction to the downside. Let's go on another week so I can show you a better example. For example, this right here, okay, this is obvious that it worked out. Let me show you something that does not seem like it worked out. Let's see this week high. This weekly high, okay, if we took here Enigma 2.0 bearish setup, so it seemed like we would get stopped out because of nice bullish weekly candle. Now let's see, where is that? Right here. That's the weekly high swept. Okay, weekly high swept here, looking for a market structure shift or a bearish engulfing candle on a 15-minute time frame. That means we get 5-minute market structure shift. No bearish engulfing candles, we have it right here. Okay, that means there's a market structure shift on a lower time frame. Stop loss, and also this is 100% Enigma 2.0 high of the day zone. Weekly high swept. And remember, the weekly candle was so strongly bullish. Let's say we would target for TP1 this low. And bam, TP would be hit. And by the way, even though the weekly candle was so strongly bullish, look at the move we would caught. This is not small move, by the way. So let's go on another weekly time frame. Every weekly sweep, every single one. For example, right here. Here, sweeping high, showing beautiful reaction. Let's see another weekly. I don't do this for daily, but I do it for weekly. Weekly low swept. As you can see, taking, where's the midnight? I'm using UTC plus 2, so midnight is samurai here. Bearish Enigma 2.0 zone, taking beautiful, nice trade. I think this is the trade we took a few days ago, somewhere like this. Weekly sweep, also predicting news. So yeah, I don't know, did I send out this trade or something like that? I cannot remember. Okay, weekly time frame. Weekly low swept, we have weekly high swept. 15-minute time frame. What can we see? Reaction. This is where we took a long trade, right here, and price reacted higher. We got this weekly time frame. Strong reaction to the upside, probably we would get a losing trade. But if we take a look, price swept high. We didn't look for trades here because of this consolidation, but still, price swept weekly high, so we are expecting bearish reaction. Look at this, Enigma 2.0 high of the day zone. Boom, big move lower. Even though we got big bullish weekly candle, and that's for every weekly candle. So this is how weekly candles are important. Weekly highs and the lows, and also session highs and the lows are also really important as time-based liquidity level, which will most of the time get reaction. So that would be it for this call. This is something really interesting based on yields, DXY and EURUSD, complete data, and what I think is gonna happen. So that would be it for this call. I hope everyone liked the call, and see you in future calls, and see you actually tomorrow. Maybe tomorrow we will take some trade. So yeah, goodbye.